Welcome to the Stock Market Daily News podcast for Wednesday, March 12th, 2026. I'm here with your market recap from Tuesday, a session driven by energy headlines, tech earnings, and AI sector debates. The S&P 500 rose slightly. The Dow Jones held steady, while the Nasdaq climbed nearly 1% as investors watched for both opportunity and risk. The big story? Oracle's surprising rebound and what it means for the broader tech and AI landscape. Stay tuned to learn how surging oil, AI hype, and market valuation concerns are shaping your investing playbook. First, Oracle roared back into the spotlight after weeks of turbulence. Following earnings that topped Wall Street estimates, Oracle shares jumped more than 11% pre-market, closing up over 8% at $123.50. Revenue surged to $17.19 billion, up 18% year-over-year, with cloud sales rocketing 41%. Investors were relieved as the company addressed AI SaaS apocalypse fears, assuring that generative AI will strengthen, not replace, their software business. The rally also boosted the tech software ETF by about 1%. For investors, Oracle's results highlight both ongoing AI demand and confidence in traditional cloud players adapting to the AI transition. Meanwhile, energy markets kept everyone on alert as oil volatility spilled into equities. Brent crude swung between $83 and $100 per barrel after conflict in the Middle East closed the vital Strait of Hormuz. These supply shocks have rattled not just energy stocks, but also chip makers like TSMC and Samsung, which rely on stable energy and materials for their AI-related fabs. The U.S. Energy Information Administration now expects Brent to average above $95 per barrel through spring. If energy prices stay high, expect ongoing pressure on margins for both tech and transportation sectors, and continued market sensitivity as the crisis evolves. In crypto land, Bitcoin struggled to hold gains, sliding to around $69,500 after a failed attempt to break $71,000. Uncertainty over the Iran war kept markets cautious, with over $200 million in crypto futures liquidated. While traditional safe havens like gold and the dollar traded flat, AI-themed tokens like Internet Computer and Fetch rallied, showing strong retail demand. For traders, this means enthusiasm for AI extends beyond equities and into digital assets, though volatility and correlation risk remain elevated. Turning to the broader market, the so-called Magnificent Seven tech stocks outperformed as investors fled to perceived safety amid global volatility. Tech climbed 1.5% from late February, even as most S&P 500 sectors lagged, reflecting a persistent flight to quality during geopolitical stress. But analysts warn that much of the AI surge is being fueled by record capital expenditures and intricate financial arrangements. Some point to potential bubble conditions, unprecedented AI spending, complex cross-company financing, and uncertain business models for all these new AI tools. Long-term investors should watch for signs of overheating and be wary of unsustainable growth assumptions. Finally, Oracle's rally came even as AI sector jitters punished other software giants. 8 of the world's 10 richest people saw their fortunes shrink this year as valuations came under scrutiny. Larry Ellison, Oracle's chairman, is down $47 billion so far, and Jeff Bezos has lost $15 billion as Amazon slides under the weight of massive AI investment plans. To recap, the S&P 500 closed higher, the Dow was flat, and the Nasdaq gained ground, powered by strong tech earnings and oil-driven sector shifts. Key trends to watch include the ripple effects of energy shocks, the durability of the AI rally, and growing debate over tech stock valuations. Looking ahead, keep an eye out for upcoming inflation data, more earnings reports from the tech sector, and fresh Fed commentary. That's your 2-minute and 30-second roundup. Don't forget to subscribe for your daily shot of stock market insight. For more market updates, check our website or follow us wherever you listen to podcasts.